Stream is
Good
live.
morning and welcome to Go-to-Market Friday. We've shifted. Our previous episodes have been account based, but now we're taking a broader view because, quite frankly, the 380 videos that we've done have been around go-to-market strategies, and today's no different. For the first time in a very long time in the history of our couple years, my co-host Meg and I, who have been doing this, we're welcoming Bob Parker, who's got a financial background. We'll give a formal introduction in a moment. He's been a former CFO, but we're going to dig deep into the CFO's viewpoint of what's happening in go-to-market today. This is going to be a great conversation. My co-host Meg ran Serious Decisions Research, been a former CMO. She and I have been doing a bunch of episodes. If you have questions, you have the ability in both LinkedIn or you can DM us and ask us questions real time, and we'll populate them up to ask of Bob or Meg or myself on the financial viewpoint of go-to-market. And yeah, just to kind of complete out on Bob's bio. So long story short, Bob has been a very successful CFO. If you're familiar with SentinelOne and their IPO, he was part of that process as CFO. He's been involved as CFO in 5 startups, but he's also had big company experience at Sun Microsystems as well in a financial capacity. Bob and I intersected too many years ago. We won't get into the explicit number. Along that journey of the CFO path, we've kept in touch. So, Bob, I want to thank you again for coming out on such early and short notice with us.
Listen, I appreciate you guys having me today, and it's good to talk to you again, John.
Awesome. Well, maybe we could just start, and maybe you could share a little bit about your perspective of being a CFO, looking at go-to-market. Like, what are some of the things and topics that you hear when people are approaching you for investments? Like, what does that talk track look like from your perspective and a CFO perspective?
Well, I'm going to keep sales outside of the go-to-market because that's a whole different ball of wax, and just focus on the marketing, unless you want me to talk about, the kinds of things sales ask for. And by the way, if sales asks for something, or I think if marketing has a plan, they need to make sure that they actually have each other's back in that proposal too, because as you know, they're inextricably linked, right? And one is successful based on the other's success. So if marketing comes to me or sales comes to me in a silo and says blah, 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 I need to make sure that marketing or sales is lined up with that strategy. I think in the marketing side, the last couple of years have been odd, right? But there are opportunities to take share and take. There's a lot of dying companies out there with dying technology that just can't get funding. There's a lot of companies that have fits and starts. And if you're in a well-oiled company that has truly found product market fit, and there are tangential sorts of opportunities that marketing has identified that we could go after, bring me your business case, right? Make sure sales has seen it, and the three of us can sit down and say, for an extra $250,000, this industry that we're not into, I want to start to seed it. I really want to start to gain mind share because the incumbents there aren't going to make it. And here are all the reasons why. That would be perfect for me, right? We leave that room aligned. Your friendly neighborhood CFO always has a pocket of money. We always have a pocket of money. And it's a matter of how we discretionally want to break that out and give it to. Many times the CEO knows and doesn't know about that, because we also use that as shock absorbers in the P&L when things go sideways. So if things are on the up and up, bring your proposals to me, and in order of importance, anything in the demand gen that will give me more visibility, more confidence, show me, how do I maintain a 4X or 5X at most? That's fantastic. Commit of what's in the pipeline versus what the sales guy is committing into the quarter for the bookings number. How do I de-risk that because of the work that marketing has done, channel has done, and even the own work that the sales reps themselves may have added to the demand gen channel, right? So how do I ensure that that engine is fed, is performing extremely well, such that when we sit down with the street, God help us, or just the board alone on a monthly or quarterly basis, we can with confidence say that the business is up and to the right, or the business is flatlining, or we've decided to juice X, Y, and Z. And here are the reasons why.
Thanks, Bob. And I think that's, that's helpful to kind of have that perspective. And also, I mean, marketers, I think, need to know they're competing for that budget, right? And one of the ways that you win is by building trust with your CFO, it seems to me, and have them be willing to listen to your proposal while other people are also asking for that pot of money. What are some ways that a CFO or that a CMO can build trust, build a really positive and constructive relationship with their CFO?
I think lots of communication. I used to sit next door to our CMO at Sentinel One, and we spoke very often, maybe 4 or 5 times a day. And if we do allocate some limited resources to you for whatever it may be, come back with the answers. It failed, and here's why. Or come back and show me, we think we have a little bit of a light at the end of the tunnel. I need a little bit more gas on the fire. And that's what builds trust. And you'll get to the point with your friendly neighborhood CFO where you do that enough times and you ask, and it's a reasonable ask, your answer is going to be a lot quicker to yes, right? And that's what CFOs do in companies in general, is we somehow pick up on who we think are trustworthy. And trustworthy is probably a bad word, but who we know if we gave somebody an investment to, they would either do what they said they were going to do or come back and say, I failed, or I was successful, or I think I got a bit of traction here. Can we have a further conversation? If you hide that data, if I send my smartest FP&A people in to audit your information, it comes back that the pipeline is half of what you told me it was, trust goes out the window.
Totally makes sense about the trust element and, not hiding things. So I guess it's, in a way, it's surprising that some people would do that in today's day and age when everything is so publicly available, like in your CRM system, everything's on Main Street, but it sounds like the numbers don't necessarily have to line up to the talk track, or sometimes the talk track's not lining up to the numbers, is what I'm hearing you say. Am I hearing you right on that?
Yeah, I think so. And I think the why is much more important than the what. Like, why did this happen? Why did this, like I said, we spend a lot of time looking at least I do, a lot of time in the funnel and really what's real and what isn't, and what's the sales discipline around that. And yet there's sort of an adjunct to this, that any company I've been into that has a really strong head of FP&A, head of marketing operations and sales operations, I hold them accountable. They must be completely aligned on what's coming in, what the profile for the sales teams and the efficiencies are, what the results may be on the back end. And that can be a little tension. In the beginning, there could be some tension there, right? Because you have everyone looking over everyone's shoulders, especially the finance guy looking over the marketing and the sales ops shoulders. But having a really good person who can build that triumvirate at that level, worth its weight in gold.
Yeah, I think we would violently agree with you on that, especially like we see the value of marketing operations. It's kind of why I've made a business out of it. Because the stronger that is, the stronger visibility you have into the performance of your business, quite frankly. And if you're weak there, you're guessing at best, which nobody wants to be in that position. And just a follow-on question then, when you say that organization of, you said sales ops, marketing ops, what was the third one?
The head of FP&A, financial planning.
FP&A. Okay, so that's kind of your person who's doing the checking of all the information.
I like to think of it's a partnership versus a checking.
Right. Okay, gotcha. And do you see, have you seen those functions as a finance function, meaning marketing ops and sales ops working for finance and being neutral, or do you have a preference on where those organizations sit?
I have managed sales ops before, and there is some alignment between sales ops and finance, of course. But I'm not religious in that way. If you have a strong sales ops person working for a good CRO, you have a good marketing operations person working for a good CMO or VP of demand gen, I'm perfectly happy, right? And you start that conversation with, we're not here to embarrass anybody. We're not here. And by the way, the other thing, and this comes from an old boss I had many years ago, but it stuck with me, is that everyone at that table has to understand your first job is sales and your second job is whatever we hired you for. So align yourself to that, right? I don't care if you're an AP accountant, you figure out how to help drive sales. Now, of course, we can keep you coloring in between the lines and all that sort of stuff. But at the end of the day, you have to understand, we hire you to be a salesperson first, whether you like it or not. And then the second job is whatever we hired you for.
Well, and Bob, I'm curious too. You mentioned demand gen being a great road to trust with a CMO, and it being something that you can absolutely, report on, track, understand, use to evaluate how you're doing. What about when a CMO needs to invest in something that's longer term, say investments in brand and awareness that we know are really critical to the health of a company and its growth and its demand? What are some of the ways that you would advise a CMO to position investments in things that are longer term and maybe a little bit further upstream from, hey, this generated 6 leads?
Yeah, I'm a big fan of, at the right time in a company, putting some gas on the branding engine. I think getting that out isn't important, but I don't know exactly when the right time is. Is it a Series A company? Probably not. A little bit of Series B, probably. But that Series C where you've proven product market fit, I would think that we would like to start to spend more money on branding. And, some of the good branding stuff I've seen is stuff in airports. I'm sure you've all seen that. I saw the trays that you put your stuff in to go through the X-ray branding there, and it just resonated with me. I don't know what the world of billboards is like anymore. They seem to be sort of a clutter of things, but I do think that branding has a return that is hard to pin on where leads or sources or really the true value of that is. But I think it's a foregone conclusion that everyone understands that branding is important. It's just when and how much do you pour into it, at potentially the expense of something else. Or if you've raised a round of money or you're doing very well, that is one of those things that you've been pushing off saying, now that I have some money, that's where it's going to go.
Yeah, it's such a,
like I said, like I said, I worked with a CMO a number of years ago who was just a very, very, very bright guy. He wound up asking for forgiveness more than permission when it came to branding. And by the second or third time he had done something at RSA, I said, hey, whatever you do, let me know what it costs.
So it sounds like he built the trust over time, and you were a little less concerned about the output because he had built the trust with
Well,
him.
I knew when he hired a plane that flew a banner with the company's logo around downtown San Francisco during the RSA conference, and it absolutely infuriated, 50,000 people. We were onto something.
Yeah, and security industry is definitely an interesting and unique one too. And just kind of thinking about on the branding side and just the overall climate that we're heading into here. A lot of companies are in planning season for 2026. And with that, there are asks around headcount and asks that are around investments like AI. How should we be thinking, or how would you advise a CMO to be thinking about those investments in 2026, knowing that a lot of these companies are upside down on their cost of acquisition? I mean, it's a tough time right now. Like what would resonate, what wouldn't resonate in that kind of pitch internally to you?
What my visceral reaction to that is, I would hope there would be a strategic planning process that's about 3 or 4 months ahead of that. right? Where the management team has sat down and said, what do we want to do next year? What do we want to be in 2 or 3 years from now? And what are those 5 or 6 major objectives? This much share, we want to be in this market, this much ARR. And you back into then what does it require next year? What kind of investments are required next year to get us to where we want to be in 2 or 3 years from now? Then taking into consideration, some of that stuff needs soak time, right? And getting the management team to align that early investments in branding now, or a new CRM system, or some further alignments between marketing made now may not pay off, but we've all agreed that they're critical for 2 or 3 years from now to get to that big number. And that big number may be 100 million in ARR or 200 million in ARR, or, on the IPO track, or whatever it may be. So that's an angle that I would push early on, because then in a finite resource allocation, I have the ability to go back and say, well, listen, you all agreed these were important. We all agreed these were important. Some of them are not going to have returns today. Some of them may not have returns tomorrow, but we have enough gut feel that it will start to seed what we need it to be in 2 or 3 years from now. The other thing that I would encourage is anybody who shows up at a budgeting exercise has done an exhaustive review of their prior year and said, what isn't working and what was? Because inevitably CFOs are going to ask you, not just marketing people, but everybody in the company, you want more, but what can you change? What's not working in your organization today? So are there things that you can manufacture your own headcount or manufacture your own investments by just moving things around? And if there's things above and beyond that, I'm more than happy to have a conversation about that, right? Especially, also dependent on where the company is in its life cycle. I tend to be investors in just enough in the G&A world to keep the company moving along, making sure that marketing, sales, and engineering are the people who are getting the largest share of any investment. And at some point, the G&A piece needs to catch up, but spreadsheets work pretty well for a while.
Well, and as you're thinking about sort of that longer term plan, what are some of the things that you think CMOs should be measuring and that you've seen be effective measurements for marketing that help, I think, keep the rest of the management team on board with understanding what in the world marketing's doing, but that also help them with that diagnosis to say what's working and what isn't? What's your kind of perfect dashboard for marketing at the CFO level?
Well, that's a good question. I haven't really thought about that, but I can give you my visceral reaction to that. First of all, what you can't measure, you can't manage, period. Right? And every organization has to have some way of measuring their efficacy in the business, right? Whether it be customer support, cases per head, cost per case, time to resolution, whatever it may be. Sales is always around quota attainment, growth, clicking into sales competencies, like how does a team in Atlanta that has the same profile as a team in Los Angeles in terms of market TAM and in terms of capability and size have a much different outcome in terms of results. One's every deal is 60% discount, and the other one's every deal is 20% discount, right? So those are the kinds of reaching into sales and understanding the dynamics between sales enablement, and maybe they're not up to speed or just bad people, not the right people, not bad people, just the right people. Marketing needs to, and again, you've heard me say this, if I can understand what's the pipeline and the quality of that pipeline at any given time, and we know that our leads generally come 30% from the channel, 50% from marketing, and 20% from organic or web. What are the dynamics that happen in that pipeline every quarter? How many deals roll in? What percentage shift to the next quarter? Which percentage shift where they are in the pipeline? because that then gives me and the CEO confidence to say that the numbers we're looking at, not only today, but for the next 6 to 9 months, at least on the top line, we can defend, right? And I don't underestimate the complexity of that demand gen work, but that's definitely a place that, it's the dark arts. If you can get somebody who understands all those moving pieces, and then the holy grail, of course, is being able to ascribe some affinity to some action early on that really started to trigger some sorts of anomalies that were positive on the back end of that. We were getting more calls, more leads, website traffic picked up. Maybe we did a branding initiative and the website traffic picked up. We did a funding announcement, website traffic picked up. Those things are all really important to me. And then things on the outside of demand gen, like field marketing, you have to be at some events, but I would also suggest that a lot of what we've done in the past around setting up a booth and a tent and trying to hand out plastic tchotchkes and, it's got to be rethunk. It's perfect for disruption. And even this past year at RSA, some of the more established companies that had brand awareness, they weren't even putting booths up on the floor. They were renting wings of hotel rooms and just having a free-for-all come in, let's talk business meetings, and stayed away from handing out rubber balls and rubber chickens with their company's logo on it. So I tend to, as I've gotten older and been through that, that's just one area I tend to question a lot. Like, you got to do some of it, but how much do you have to do?
Yeah, that's a great point. And those events, especially out in your neck of the woods, you've been out there in Silicon Valley for 30 years, and I know our paths crossed out there, but those events, particularly in Moscone and Vegas, they are really expensive events. So not only are the rubber chickens costing you, but the union workers that are helping you do X, Y, or Z, or, Javits Center closer to us in the city. It's ridiculous what they charge now.
And many times the core thought process behind it is we just have to do it versus what are we getting out of it? Or have we thought differently about this?
Gotcha. Yeah, no, and I agree that we definitely see the same theme of, especially marketers, maybe not in the security industry, but marketers selling to marketers. We see a lot of that hotel wing or a private event. They've shied away from the bigger free for all. So it's probably starting to bubble into security. Just a closing question on my part, because we're kind of coming up here on time. Going back to what you were reflecting on earlier about the planning process for new investments, you said, hey, we should be planning 2-3 years out and, going through that process. The challenge that I see right now is AI has entered the scene, entered the chat, and it's very, very disruptive. It really didn't exist a year ago like it does today. I mean, maybe it did exist, but it was in nascent form. Today, it seems like it's everywhere. How would you propose, if somebody's coming to you with an AI initiative in sales and marketing, and they're saying, look, we got to make this investment, is it the same exact criteria of like, what's the outcome? What's the productivity gain? Like, help on that talk track there?
That's an excellent question. And I got to answer that again viscerally. My visceral reaction would be, I would be ears open to any AI investment. But let's talk about what that is today. What do we expect it to be tomorrow? And then, what is your roadmap, let's say, for using that piece of AI technology, right? And I'm not going to ask you for a return on that just yet, because we don't know, right? But it's one of those events in tech that we have to embrace. We have to, right? And if you can create, there's an AI tool that, instantly takes leads and has the ability to, with, some statistical analysis, apply, attribution. I'm willing to look at it. Right. So I think the short answer is, John, is that I have a different priority process for that. I think I'd be willing to with a little bit of investigation, a little bit of work, I'd be willing to invest in AI related tools for sure.
Well, it sounds like it kind of goes back to what we were talking about at the beginning of the conversation. What's the why behind the investment? What do you believe you're going to get out of it, and how will we know if you did? Probably goes a long way to making sense of whether or not an AI investment's worth it. Would you agree?
I would agree completely. Completely.
All right. Well, why is always a good answer to have in general.
Excellent. Well, we're brushing up against time here. Maybe before we close out, Meg, any last thoughts on your part?
Just a big thank you, Bob, for joining us. We really appreciate your time and your insights.
Anytime you want the friendly neighborhood CFO to give you a perspective of where the rubber hits the road and keep the marketing people grounded, let me know.
Yeah, because we love being untethered especially with money and spending. Like, oh, we could spend here, we could spend there, but
it's the end of the quarter. Oh, we have money left over. Quick, let's go spend it on tchotchkes.
Well, no, that's the secret we keep from CFOs. Like when we know we got to spend that money, we don't tell them that.
Well, you know what we do in CFO land is we look at those field marketing people, and if we think they're a little sketchy, we wind up notching down their credit on a monthly basis without telling them. So they go to buy a bunch of stuff and swipe a card, it doesn't work, and they make a phone call to me and go, "Hey, what happened?" I go, "Oh yeah, we took your card down."
It's all about the dollar. Well,
that's right.
Any closing thoughts on your side, Bob? Or I want to thank you.
No, I appreciate this. I think in closing that finance and marketing and sales have a very, very close relationship and support. That for how is the product operating? Is the customer happy? Are we solving the problems fast enough? And do we have enough mind share from the customer? Engineering is the harder investment, trust me, right? Because that's sort of a black hole. But having those four functions lined up very closely is extremely important. And I've been fortunate to have some really good partners in the past, like at Sentinel One. They were just fantastic.
Excellent. Well, fantastic. Thanks for joining early morning. And
you bet.
On the theme that you had mentioned earlier about having a strong operational function, next week we have Mike Rizzo, who is the community lead for the marketing operations community. He'll be talking to us. He's got an upcoming trade show that he does just for marketing operations professionals. But we'll get the latest and greatest in terms of what he's hearing, both from an AI perspective and the community of marketing operations. So should be an exciting conversation. We will see you next week.
Looking forward to it. Happy Friday.